Paul McCulley, former chief economist at PIMCO and an adjunct professor at Georgetown University's McDonough School of Business, joins us now. Paul, it's great to get your take on this. I mean, we have this data vacuum ahead of us, most likely. There has actually been some balanced, maybe even hawkish Fed speak since the last Fed decision, and yet you think that the path is clearer toward further rate cuts. Why is that?
Yeah, I don't think the shutdown is a good thing from the standpoint of democracy. It's a sign of dysfunction, which is a bad thing. But the irony is I think that the absence of data in the very short run will reduce the Fed's excessive reliance on data dependence. We tend to get wrapped around the axle of every piece of data that comes out. And I don't think we need to do that right now. The accumulated data for the last 3 to 4 months bellows loudly, I think, that the Fed needs to be moving from restrictive to neutral and doing so with dispatch. So the irony is that without data, the Fed is not going to be having a lot of noise about what it's going to do. And I think we're going to see 25 basis point cuts at the next 3 to 4 meetings, which will take us to a 3.5 zone for the policy rate, which I think is neutral and is also very consistent with where the yield curve is, with the 2-year around 3.5 and the 10-year around 4. The only thing that's wrong with the yield curve is it's not validated by the policy rate, and I think this clears the path for the Fed to do that in a measured, steady way.
Right. So if the Fed is on this, normalization path, getting down toward neutral, because its risk management assessment has now tilted, in the direction of trying to support the labor market, what does that do for the internal dynamics of the Fed, where the debate seems to stand right now? Because as I mentioned, you have a lot of Fed's committee members who are not really wanting to be committal about how many more cuts.
Yeah, and I think that's very normal that the FOMC doesn't want to commit to what the dot plot is saying. They stress that all the time, and I totally understand that it's not a promise, that it's not a commitment. So that's normal. They would be saying that. And I think there's also genuine disagreement within the committee about the path, not so much the next few cuts, but where the terminal rate is. So I tend to interpret the hawkish sort of talk is people saying, I really don't want the terminal rate to be below 3.5%, 3% in that sort of zone. But I think there is a widespread consensus on the committee that we need to move to neutral. So I think there's jockeying around that. But I think Chair Powell, as he did last month, will do a marvelous job of coalescing about a steady march of 25s without promising that's what they're going to do.